brutal, brutish, and bearish last week, and we finished the month of May in the red. Year-to-date, Nigerian stock market is down about 3.73%. We lost 3.38 last week. The market was significantly higher in terms of the primary indicators, in terms of volume, nearly 97% to the upside, and in naira value, that's about 429.16 billion. If you flip that page over, and you can see those primary indicators, in total of deals were almost 20,000 in the final week of May. And of course, if you just throw that away and bring in the 5 main sectors, you can see the banks about 4.5% in the red. The construction, the consumer goods was down 8.54%, industrial goods about 10.30%, and oil and gas 2.31%. Let's bring in Eronmosele Aziba, who is one of the investment analysts at Afrinvest, to talk to us this morning. Good morning. It's good to see you.
Good morning, boss.
Brutal, brutish, and bearish. That was last week.
Yes.
That was the month of May.
Essentially, we saw the bearish sentiment in the market sustained for greater parts of the month, as a lot of investors continue to sell off on their positions. In fact, last week we had the market lose on all trading days, extending the bearish run to 11th consecutive trading session. And last time we saw anything like this was back in June of 2015, when we know how investor sentiment was pressured by the FX liquidity issues that we saw. So we've seen a lot of sell-offs, especially across the market bellwethers, so the likes of Danksem, Nestle, Nigerian Breweries, GT Bank, Zenith, and likes, and they've continued to drag market performance.
This sell-off in industrials and consumer goods quite significant.
Yes, we've seen major. I mean, we know that Dangote Cement remains the most capitalized stock on the exchange. So essentially, most of the time, whatever direction that stock moves, you see the broader market move in that direction. But beyond just that, like I mentioned, we saw sell-offs across other sectors. We know that investors' appetite for emerging markets equities over the past month has been significantly dampened, and as a result of that, we've seen a lot of exits. So even this negative performance that we're seeing from Nigerian markets is quite similar to what we're seeing across other African markets, looking at Ghana, Kenya, and Egypt, and the likes.
So I have low prices. I want some bargain hunting. At the same time, some analysts are saying I need to be cautious. Balance these metrics for me.
Yes, so based on current market performance, it would be such a bold statement to say that the downtrend is over. But if you're looking at the market on a technical analysis basis, so for instance, looking at the relative strength index, which tends to give a sense of direction markets could possibly go, currently we have an RSI of about 10.8 points, which shows that the market is in the oversold region and is ripe for an upturn in performance. And even going beyond that, with the losses that we've seen over the past couple of weeks now, we've seen prices fall to some attractive entry prices for investors to take position in. So we believe, looking at trading activities this week, we might start to see some of that bargain hunting come into play, especially in this market bellwethers, which have historically performed positively and have fundamentally sound numbers to drive.
If I'm bargain hunting as a local investor, what should I be looking for?
Well, our top picks will still remain in the banking space. So over the past weeks, we've seen, especially the tier 1 banks, we've seen GT Bank, Zenith, UBA decline significantly. In terms of looking at upside for these stocks, we believe there's still that potential for capital appreciation, especially as we'd start looking towards Q2 results from the end of this month, and our outlook on these stocks remains positive. So our top picks would be in that space.
Yeah, well, the front page, I'm not sure if you've seen it, but the front page of Business Day newspaper today says that Nigerian banks has good ROI, return on investment, and all that. So do you think this is the story playing into what you're saying, that whatever the downside or haircut I'm seeing massively now in the banking sector, gives me an entry opportunity.
Definitely.
Will that be across board? Because we've seen some sell-off and pullback in the prices of even the tier 3 banks. Well, but again, if you look at Unity, Skybank, Wemmer, and those 3 or 4 in that category.
Yes, so in terms of those tier 3 banks that you talked about, looking at their historical performance relative to how they're trading now, our outlook on the stocks remain somewhat negative. We don't really see that significant potential for upside, especially in the short to medium term, which is why we would rather suggest that investors play in the tier 1 space, where we've seen them demonstrate their resilience to activities in the economy and have continued to deliver alpha to investors. And even in terms of their valuation relative to peers across other African markets, can see that there's that opportunity there in our Nigerian banks.
If I am interested in fundamentals, therefore, do you think fundamentals are still really strong for, and I go back to the industrial and consumer goods space?
Well, definitely. I mean, for Dangote Cement, looking at their historical results, and even in terms of their position in that space, there's still that potential for upside. Considering the fact that last week we saw a significant dip in the value of the stock, we might start to see bargain hunting in that stock this week as well.
But what's spooking investor sentiment?
Well, so one of the first factors that I mentioned, which is tied to some reversal in foreign capital flows into the markets, the strengthening dollar, as well as the expectation of a further rate hike in the developed market, has sort of driven this pullback that we've seen in capital flows. But beyond that, what we believe could possibly have had an indirect impact on our domestic market. If you recall, last week there was the release of a circular from CBN in terms of the management of FX in the market. From conversations that we've had with some foreign investors, they're pointing to the fact that confidence in the current management of the current FX regime might have started to wane, and we know how tightly linked to the FX market our domestic market is. So if we're starting to see any dip in confidence on that end, then it might also drag market
Godwin
performance.
Emefiele and his team needs another multivitamin for the FX.
Well, I mean, that's another factor.
Let's just put it that way. You just need to inject another vitamins into the I&E windows. Something different has to come on board. So the thing, the rally has run its course 1 year, 3 months down the line, and we now have to tinker with that.
Well, it's a factor that investors are looking at, like I mentioned, from discussions that we've been having. It's the management of FX.
What's your outlook on June?
Well, for June, even though we might start to see the losses taper, especially considering the fact that we've seen stocks fall to significantly lower prices now, and we believe it will largely be driven by bargain hunting. Although we don't expect to see the sort of massive rallies that we had around this same point last year, but we expect to see the losses taper as investors.
And you think finally the year will finish off in the green by whatever magic, whatever sentiments?
Well, our
on the back of macroeconomic
with the improvements in the macroeconomic indicators, so we're seeing macroeconomic conditions improve, GDP, PMI, external reserves continue to rise, oil prices rallying. Considering all these factors, we believe this could possibly drive sentiment in the year, and the markets could close in the green.
I'm looking for green. Thank you very much for kicking off the market week and the first Monday in the new month of June. When we come